Hello, and welcome to Global ChartWatch. We learn how to read price behavior, how to spot the zones where money moves, and how to decide, with confidence, when to buy and when to sell. Whether you're completely new to price action, or someone who already studies candles and structures each day, this series will guide you through real examples, taken directly from the market. No guessing, no fluff, just price and logic. Let's begin this episode with a fresh setup. We're watching a chart that's in a critical moment, and we're going to read it from the ground up. So take a breath, sit back, and let's slow things down. Really slow. Because the market doesn't reward those who rush. It rewards those who wait. Now, take a close look at what the market is doing here. Price is moving quietly. No big jumps. No spikes. Just slow, controlled movement. This is what traders call a consolidation zone. But we're not just watching any consolidation. We've drawn something very specific, a box. And this box has a purpose. What is this box? It's a visual frame that helps us lock in on the key decision zones from the previous trading session. We mark the high of the previous day and the low of the previous day. Then we connect those 2 points into a clean horizontal structure. Top line, bottom line. That's our box. That's where everything important is about to happen. Why does this matter? Because these levels, the top of the box and the bottom of the box, represent the psychological memory of the market. They show us where buyers were strongest and where sellers fought back. They're the footprints of big players and the edges of emotion. Now, as we begin watching this price behavior, what do we see? The market is staying inside the box. It's pacing back and forth, from the lower half to the upper half, but never fully breaking out. This tells us something important. Yellow circle emoji, there is no dominant side yet. Neither the buyers nor the sellers have taken control. The price is balancing, but not forever. Because every range, every box, eventually breaks. The question is, who will push first? Will we see a breakout to the upside, indicating strength from the buyers? Or will the market collapse below the box, revealing weakness and selling pressure? Our job is not to guess. It's to observe and prepare. As price moves inside this box, you'll notice something subtle. The candles are small. There's little commitment. The market feels unsure. And that's perfectly normal. Because this part of the chart is called the no trade zone. Let me say that again. Warning emoji, this middle zone is a trap. It's where most retail traders lose money. They enter too early. They guess direction. They chase candles that go nowhere. And they get caught in fake breakouts. Or worse, stuck in volatility with no exit. But you won't make that mistake. Because here on Global ChartWatch, we don't act from emotion. We act from structure. And the structure is clear. Push pin emoji, wait for the edge of the box. Push pin emoji, wait for the breakout. Push pin emoji, wait for confirmation. So, right now, we're simply observing. Watching how price behaves as it presses upward. Touches resistance. Then backs off. Presses downward. But doesn't break. It's testing. It's gathering energy. It's a calm before the storm. And when the moment comes, when price finally makes its move, you'll be ready. Because you saw it forming from the very beginning. In the next chapter, we'll explore exactly what happens when price challenges the top of the box. And how to tell whether it's a real breakout or just a fake. So stay with us. Take notes. And remember, the market always speaks. You just need to slow down enough to hear it. We now see price gradually drifting upward. It's rising slowly. Not with power, but with curiosity. Each candle approaches the top line. The edge. The zone where sellers usually wait. And this is where things start to get interesting. Notice the character of the candles. There is hesitation. Small wicks begin to appear at the top. Bodies become shorter. Closes become uncertain. The market is tapping the ceiling, but not yet breaking through. This is what we call testing resistance, and how price behaves during this moment tells you everything about who's in control. Let's slow it down more. One candle forms a tiny wick, trying to push above the line, but gets pushed right back down. That's not momentum. That's rejection. Buyers had a chance to break through, but they didn't follow through. And that means something. It means sellers are still sitting there, waiting, watching, prepared to strike. Then another candle comes. It pushes again. A bit stronger this time. But still, not convincing. You start to see a series of candles clustering near the top of the box. But none of them have conviction. This is where most inexperienced traders make their first mistake. They assume the breakout is coming, and they jump in too soon. But a real breakout has intention. A breakout is loud. It doesn't whisper. These candles are not loud. They are whispers. And when price whispers near resistance, it's warning you. Warning you that the market is still unsure. That the smart money, the institutional players, are watching retail traders take the bait. They let the price test higher just to sell it right back down. So you must be patient here. This is not your entry. We wait for confirmation. We wait for the story to unfold. What comes next is critical. Because the market can do one of two things. Small blue diamond emoji, break through cleanly and hold above a true breakout, small blue diamond emoji, or reject again. And begin the reversal downward. Right now, we're on the edge. And smart traders know. You don't trade at the edge until the market decides. Also, take note of the volume if you're watching live charts. In this moment, volume often drops. The crowd is waiting. Big players are watching. And when the breakout does come, if it comes, you'll see volume spike. That's how you know it's real. That's how you know who's in control. For now, in this image, we remain calm. We observe this cluster of candles as pressure builds. Because when pressure builds, release always follows. After all the hesitation near the top, the market begins to shift. Not with a crash, but with quiet intention. You see the candles leaning downward now. Not aggressively. Not with panic. Just slowly. Pulling away from the ceiling. The pressure that once built near resistance is fading. And price begins to surrender. It starts with a single red candle. Small. But clear. It closes lower than the candle before it. A soft message from the market. The buyers have failed. Another red candle forms. This one is slightly larger. It closes even lower. It's not dramatic. But it is consistent. The attempt to break the top is over. Look at the sequence. Every new candle steps a little lower. Each closes beneath the last. There's no more testing. No more rejection wicks. Just a smooth, quiet descent. This is a shift in control. Now comes a long-bodied red candle. The first bold move we've seen in this session. It breaks beneath the entire cluster before it. That cluster of small candles near the top? That was indecision. Now, it's momentum. This long red candle cuts through that structure like a blade. We're not touching the bottom of the box yet. Not even close. But we are headed there. You can feel it. The tone has changed. The candles now speak with more clarity. Less confusion. More direction. So what does this mean for you? It means patience is starting to pay. If you've been watching from the start, you saw the top get tested. You saw the hesitation. You saw the failure. And now, you see the unwind. This is not a moment to panic. Not a moment to chase. It's a moment to stay grounded. The market is moving. But it hasn't reached its key decision zone yet. That zone is the bottom of the box. And that's where eyes turn next. Because if price continues to descend, if the selling continues, it will meet support. And what happens there is the next story the market will tell. So for now, we observe. We read. We wait. Because the best entries come not when you guess, but when the chart speaks first. When we zoom in, and observe the candles forming inside the box, we begin to notice a distinct pattern, a rhythm, and a battle between buyers and sellers. Each candlestick tells a short story. A story of price attempting to rise, or fall, but being held back by the limits of the box. You'll notice, many of these candles have long wicks, especially near the top, or bottom, of the box. This indicates that price is probing those areas, but being rejected. It's like the market is testing how strong the walls are. Candles with long upper wicks, and small bodies, often show rejection of higher prices. Sellers push the price back down before the candle closes. On the other hand, a candle with a long lower wick shows rejection from below, a sign that buyers stepped in. Inside this box, you'll see how candles frequently alternate in color. Green, then red, then green again. This signals uncertainty. Neither buyers nor sellers have full control yet. It's like watching a tug of war play out in slow motion. Now take a look at how the candles react when they reach the top of the box. Do they pause? Do they pull back? Or do they pierce through? And close above? That behavior, right there, is key. It's a signal that pressure is building, that the market might be preparing for a breakout. But remember, not every test of the boundary leads to a breakout. That's why we pay attention to volume, to candle size, and to momentum. A sudden increase in candle body size, especially after a series of small indecision candles, can be your first clue that something's about to change. Think of it this way. The longer the price stays inside the box, the more energy is being stored. When the breakout finally happens, it's like releasing a compressed spring. The market doesn't just move, it launches. But before that moment, we stay patient. We observe. And we listen to what the candles are saying, without rushing in. Now, let's slow down even more and look at something that tricks many traders: fakeouts. A fakeout is when price appears to break out of the box, but then quickly returns back inside. It's a trap. And if you're not careful, it will catch you off guard. Imagine this. The price moves toward the top of the box. It breaks above. Just barely. You think, this is it. The breakout is here. You enter the trade. But then, the very next candle slams back down. And now, you're stuck in a losing position. This happens more often than you think. So, how can we protect ourselves? The key is confirmation. Don't act on the very first candle that breaks out. Instead, wait for the candle to close above the box. Not just touch it. Not just peek above it. Then, observe the next candle. Does it continue higher? Or does it immediately fall back? If you see a strong close above the box, followed by another bullish candle, that's your sign. That's confirmation. But if the breakout candle has a long wick, and closes weak, and the next candle is red, you should pause. This might be a fakeout. Also, volume plays a role. A true breakout usually comes with increased volume, energy, and follow-through. No volume? Weak close? Reversal right after? That's a warning sign. Let's also talk about false breakdowns. Sometimes, price dips below the box, but then quickly gets bought back up. This is another trap, targeting people who are too eager to short the market. The secret is to let the price prove itself. Let the market show its strength before you commit your capital. One powerful technique is to wait for retest. After a real breakout, price often comes back to test the box level one more time. If that level holds, and price bounces upward again, that gives you a safe and more reliable entry. Patience here is not weakness, it's wisdom. Every box breakout has the potential to be real or fake. Your job is not to guess. Your job is to observe, to wait, and to act only when the story is clear. That's how professionals stay in control, while others chase shadows. Alright. We've come a long way. Now, let's bring everything together. Take a closer look at this part of the chart. You'll notice something very important. After moving inside the box for quite some time, building pressure, stacking candles, the price finally breaks out. It pushes above the upper boundary decisively. The breakout candle is strong, long-bodied. No hesitation. A clear signal. But wait. That's not the end of the story. What happens next is just as critical. The price doesn't keep running immediately. Instead, it pulls back. Gently. Carefully. Almost like it's testing the strength of that breakout zone. It comes back. Touches the same area it just broke above. And holds. This, right here, is what we call a retest. It's healthy. It's expected. And when price holds above that level, when it doesn't collapse back into the box, it tells us something. Buyers are in control. From there, the next few candles start to build higher. And then, boom. The next move is upward again, this time, with even more confidence. The breakout is no longer a question. It's confirmed. And now, it's no longer a breakout. It's the start of a trend. The box is left behind. Support has shifted. What used to be resistance is now acting as the floor. And with volume rising, momentum building, and no major rejection, the price starts climbing. It's here that experienced traders may choose to add to their position. Or at least, move their stop loss to break even, locking in a risk-free trade. This is why understanding the breakout The retest and the continuation is so important. It's not just about one candle breaking the line. It's about how the price behaves. After the breakout, the retest gives us confidence. The follow-through gives us conviction. And that's where the true opportunity lies. So remember, don't chase. Wait for confirmation. Let the chart tell you the story. Let the candles breathe. Let the structure form. And when the price shows strength, again, after holding the breakout, then you'll know, it's time. That's when we act. And now, before we wrap up, I want to leave you with this. Take a moment and stay with the video just a little longer. Watch as the price breaks out, holds the level, and then climbs again. Watch how it moves, how the candles behave, how the indicator responds. Don't just listen to the explanation. See it in action. Let your eyes follow the structure. Let your mind connect the logic. This is your chance to really understand how this indicator works, and more importantly, how to read it with confidence. So pause, rewind if needed, and observe what the market is trying to tell you. The more you watch, the more it will make sense. And the next time you open a chart, you'll see it. You'll recognize the setup, the box, the breakout, and the opportunity. So go ahead. Stay with it. And let the chart teach you.